What's going on, everyone? Sal here with a great episode. I believe this is episode 4 of my good friend Jonathan Bogan. We're going to talk about the economy today. We're going to talk about what's been going on across this country. And for those of you guys who stick around after this, we'll have a great episode of the show and talk about the latest penny and market plays that are driving the markets across the big and large indices. So looking forward to having you in the room with me as we discuss what's been going on lately. So this is episode 4 again with my good friend Jonathan Bogan. So I'm going to give him a call here. We're going to discuss what's been going on. It's been, 60 days since we've spoken to John. And again, shout out to the people who are coming into the chat room. Again, I'd like to let you guys know, if you're not interested in the kind of global macro talk, come after the show. So we're going to talk to John for an hour. I'm going to have a little break, and then I'll be back, and we'll do a live show, and we'll discuss tickers across the penny plays and market wide. Okay? So let me go ahead and get John on the line right now. Brief moment here. They're making me upgrade whatchamacallit, Skype, and I can't stand Skype. The new Skype really sucks because it doesn't let you turn the ticker off. So let me go ahead, and I'm going to have to figure out how I'm going to run a live show with a goddamn ring on the thing, because this new one doesn't let me do it. All right, so let's go ahead and give John a call right now. All right, let's give John a call right now. If I can figure out, oh, there we go. Let's give him a call right now. Oh, this really fucking sucks, man. Oh, this really fucking sucks to hear that shit. Do you guys hear that? Do you hear the ringing? Oh, God.
Hello?
Hey, John, what's going on? Sal, can you hear me?
Yeah, I can hear you great.
All right, so I want to make sure the people, at least in the chat room, can hear you. Can you guys hear him good? If you guys can hear him, A-OK. John, go ahead and talk a little bit for me.
All right, I'm on the air. Can you hear me well?
Okay. Somebody says loud as hell. Okay, all right. Good. Rather be loud than be low. Okay, John, thank you again for being on the show. Ladies and gentlemen, I've got Jonathan Bogan on the line, author, speaker, presenter, and, again, creator of this incredible book, Say No to Big Government, My Case for Maximum Freedom. The link is in the description. The link to this man's YouTube page is in the description. Get him your subscription. All right. Also, go to his Twitter account. It also is in the description as well. Go ahead and follow this man on Twitter. We're making classic episodes here, folks. These are classic episodes we're creating here, because one day when this guy's in the White House or a part of the Federal Reserve or whatever that is, these are going to be classic episodes you're going to be wanting to watch during that time. All right. So, John, again, thank you for being on the show. I wanted to have you back, man, because, I'm really ready to go hard again with this YouTube thing. I needed some rest after spending the last 2 years just really, burning myself out. But I'm really energized back, and I thought you would be a great person to kind of start that phase again for me. As I said, it's been 66 days since we've spoken with you. It seems like every time we speak to you, John, the world gets worse and worse and worse. Right now, we're on day 25 of a federal government shutdown. The market is showing more volatility than ever. We talked a little bit about gold in the last previous episode. Gold is now up over 14% since we spoke with you. Actually 11.4, excuse me, 11.4% since we spoke with you. So it just seems like everything is going in the wrong direction. John, give us a little bit of your take about, what exactly is going on here and what are we to kind of look forward to, at least in the short term?
Well, I think you're going to see a lot of stagnation in government because now we have two parties that are just at war with each other, controlling one chamber of our government. The House of Representatives has been taken over by the Democrats, and the Senate stays in Republican hands. The White House remains in Republican hands. So now we have this shutdown, which is now the longest shutdown in American history, 26 days and going. And I think there's really no sign that it's going to end anytime soon because you have the president asking for something that the Democrats say they will not give, which is money to build a wall on the southern border. And not only that, but every other bill is pretty much stalled in Congress because the politics suggest that if you're going to pass a bill, you have to put reopening the government into it. So because of that threat, it has stopped all legislation. And we have no idea how long this is going to go on. People say, well, maybe a few more days. Some say a few more weeks, possibly months. And the president said maybe even years. We just don't know. And we're not going to know until we just go through the year and see what happens.
Wow. So, John, what do you think about, obviously, we can't necessarily predict the future, but we can definitely attempt to. Do you foresee this shutdown going past the summer?
Well, that is very hard to imagine. We have never seen a shutdown go on for a month. But for it to go on for 6 months, that would be amazing because we just have never seen anything close to that before. And but I think we live in a different age now. We live in a time where the President of the United States is about as unconventional as we've ever seen, and requesting something that's never really been requested before. Not border security, but a physical barrier to rival the physical barriers that we think of when we think of a country such as China or Israel. This is something that we've never seen before. So it could go past the summer. It could go through the year. Hard to imagine because we've never seen anything like that before. So I'm actually eagerly anticipating what we end up seeing over the course of this year.
There we go. Shout out to Sinclair. What's going on, Ken? I see Ryan gets it. Shout out to all the newbies as well as old folks in the chat room right now. Again, you guys can ask my friend John questions by placing them in the chat room. By placing them in there in the chat room. Go ahead and ask any questions. I want to make sure that everybody who wants to ask a question gets their question answered. And John, again, we've never seen that happen before. Obviously, as you said, we got a president who's very unconventional, willing to definitely take us there. We've got some government workers, and I for the longest time, John, I thought government workers, many of them, they're career government workers. Many of them are generational career government workers in terms of they have parents who were working for the government. I was under the impression that these people were, what's the word for it? They were well positioned economically to survive storms, right? To survive economic blows, right? And come to find out, we're at day 25. And these people are on television crying, saying they don't have food to eat. What's going on? Have I missed something in terms of how government workers handle their money? Are these people not well paid? I thought these people were some of the best paid in our society.
Well, it just depends on what kind of government worker you are, because if you look at those who are still being paid during the shutdown, such as the Congress, the senators, the representatives in the House, the president, the Supreme Court, they're all making six figures. So they're definitely well paid. If you look at, however, if you look at those people who are working for government agencies like the FDA or for the National Park Service or for any of these other, the air traffic controllers, some of them are making maybe $20,000, $30,000, $40,000 a year, wow. $50,000. And keep in mind, 3/4 of America is living paycheck to paycheck. That's been true for the entire decade. 76% of Americans are living paycheck to paycheck. 40% of them cannot find $400 in their savings. Jesus so Christ. We are a society of people who are not prepared for any kind of financial problem. We're not ready for a recession. We're not ready to lose our job. We're not even ready for a few weeks or months of being furloughed or having our income be cut down. And that's not just true for the private sector. That is also true for federal workers who are not making six figures, which I would imagine is most federal workers. So these people are now in a panic, many of them saying, I might lose my house because we're paycheck to paycheck and the mortgage isn't going to get paid. If we have another payday where we're going to see an empty check, you got people who are going to lose their car. We're talking about child care. The news is interviewing and doing lots of stories about federal workers whose lives are going to be severely impacted, negatively impacted, because they don't have anything in their bank accounts, and they're just living check to check. And it's a phenomenon that has been going on for the entire post-financial crisis era. So some of them are well paid, many of them are not well paid. And this is why it's going to be interesting when we move into February and March if this shutdown continues, because now you're talking many more paychecks that are not going to be sent out. And it's going to really start tightening up on a lot of people, even those who do have savings. They are going to see the finances really get constrained, and we can only hope that everybody will have a means to protect themselves, cushion themselves, or have somebody they know or someone who's generous enough to help them out. And that's not really a problem. But people are going to have to adjust to the situation because it is tightening up.
Wow. We're already seeing cracks in the system in terms of our country's our country's welfare system. Federal programs like WIC, Women, Infant, and Children, which is basically a welfare system for poor women and their children. Again, we've talked about here how it pushes men outside of the home and basically creates demons out of women. We've got some women now who are literally, again, going on television crying, saying they can't get their benefits from WIC because WIC, again, is a government agency that provides funds to states to disperse to these poor women. This is a chain that's really deeper than what I even thought. I mean, you go throughout our sector, we don't realize how dependent we are on government. When we talk about welfare, John, what could it look like at 6 months when when people don't get food? I mean, when the poor don't get food, what could that? I mean, do people retaliate? Could we get into a situation where people actually become violent if the government no longer can cure the hunger pains of poor people?
Well, certainly that is a possibility. We have already protests taking place around the country trying to get the government opened back up. And the private sector, this is, I think, the good news story in all of this. The private sector has reached in to help a lot of these people out. You have businesses throughout the country that are offering discounts on, mainly a lot of restaurants offering discounts and even free meals to people who are not being paid. I think one restaurant in the Washington, D.C. area gave away $12,000 worth of hamburgers last Thursday to furloughed federal workers. We have, even Canada, I heard, donated pizzas to air traffic controllers in the U.S. because of the shutdown. We've got banks that are waiving fees on furloughed federal workers, and you do have to show that you are a furloughed federal worker by producing your ID that shows that you do work for a government agency. But businesses are chipping in. We have food pantries, nonprofit organizations that are coming in with assistance. Basically, the private sector doing what it has always done, giving welfare to people who need it, donations, businesses. So it's not even a nonprofit venture. It's because you have for-profit enterprises chipping in. So the private sector is coming to the rescue. And what people should realize is this is the reason why we do not need government welfare programs. We do not need the WIC program, the SNAP, which is the Supplemental Nutrition Assistance Program, the food stamp program. We don't need the temporary assistance for needy families. That's the traditional welfare program, the straight cash program. We don't need any of this because the private sector is coming to the rescue with food, with, there's GoFundMe pages that have been set up to provide assistance to those who need their rent paid, need their mortgage paid, their car note paid. That's a private sector innovation. And that's cash that people are just donating willingly. So I think a lot of people, most people are kind of missing the good story here, that the private sector will not let people down. If they have lost their job, whether they're a federal worker or not, they will be taken care of. And it makes the case why we need to scale down the size of government, cut these programs that are causing us to go into more debt. We need to realize that we are going to be not only fine, but better off without these government programs, because the private sector will come in with their own programs to take care of people.
Wow. Thank you for that. Ladies and gentlemen, okay, we got Jonathan Bogan, again, author of Say No to Big Government, on the line right now. Again, ask your questions if you have any. Those of you guys looking for tickers, after we are done speaking with him, I'll take a break. I'll be back live again, and we'll definitely have a show to discuss the tickers that are running right now. You know, speaking about the private sector, I mean, they're going to be begging for welfare here pretty soon. John, I mean, just talk, right? Just talk of interest rate increases since we've last discussed sent the market into correction territory. You know, we've had 8 years, John, of practically free money given to some of the largest corporations of the world. And again, just the discussion of an increase of 0.25 basis points. I mean, that's basically, that's basically nothing. One increase, John, sent us damn near into correction territory. The conversation about a second increase, which is supposed to happen last month, that didn't happen, that now they're talking about shouldn't happen in March and has been delayed and might not ever happen again. And people on Wall Street went crazy. Jim Cramer on CNBC started using damn near profanity at Jerome Powell and his plans of action when he's doing nothing but working according to what the Federal Reserve Charter says they should be working to, which is an independent Fed. Yet, John, we're seeing Wall Street, the executive branch, do whatever they can to, involve themselves in how the Fed pursues their actions. Why did we see such a huge correction on such a small amount of increase in terms of the interest rate? Why are they continually to really kind of push Jerome in a corner, constantly threaten him, about his position and create a lot of insecurity in terms of the direction of the Fed? And from what I've seen, that pressure, that insecurity that we have going on there has resulted in gold rallying quite aggressively over the last couple weeks. Speak to, John, a little bit about what the Fed's role is, because I think a lot of people don't understand, and why would you think the president would be so focused on trying to control Jerome's actions, at least here in the short term?
Sure. Well, the Federal Reserve was created over a century ago to basically bail out banks and the government in a situation where there was a recession and there was a threat of a financial crisis that could put the economy in bad shape. So the Fed's role originally was to just be the lender of last resort for the banks and to be the bailout machine in a recession or an economic crisis. The Fed's role, unfortunately, has changed and gotten even more influential in the economy during the 20th and 21st century. Today, the Fed is looked to regulate everything. They're seen as the regulator of the stock market. When stocks go down, people want the Fed to lower interest rates. They're seen as the regulator for the unemployment rate. If unemployment is rising, that signals a recession. People want the Fed to bring down interest rates. If unemployment is going low, if earnings for companies are exploding, if prices are going up, if inflation is increasing, the people want the Fed to raise interest rates. They are seen as the regulator for, unfortunately, everything now in the economy. People now are upset that Jerome Powell is raising interest rates because they understand the economy is not what it used to be. It is actually very weak. And you go on CNBC and you hear people talking about the economy is doing well, it's very strong, and you hear this type of commentary from Fox News also, the Fox Business Channel, CNN, Bloomberg, any type of media where finances are being discussed, especially the president's officials. You hear a lot of optimism and talk that things are very strong. In fact, they are very weak, and that's the reason why the markets are, about having a heart attack over the rising interest rates, because they understand that companies are highly indebted, and when interest rates go too high, you're going to see more defaults, because cheap money is the way the economy has been operating, you just said, for the last 8 years, up until 3 years ago. Cheap money, 0%, has fueled the housing market. It's fueled the Dow Jones, the S&P, the NASDAQ, the Russell 2000. It has fueled stock markets all over the world. It has fueled the price of gold and silver. It has fueled cryptocurrencies. It has fueled the increase in job creation, which is why we ended up with 7 million open jobs last year that couldn't be filled because companies have all this money, all this growth in the economy that's really phony growth. It's based on debt and borrowing and spending. And as a result, now the Federal Reserve, over the last 3 years, they're tightening the money up. But we are not even at 3% yet. I mean, the Federal Reserve has not even raised the Fed funds rate, which is the bank-to-bank lending rate, up to 3%, and already people are getting scared.
Right.
What people don't know is you go back a century, back in the 1920s when the economy was booming, on the interest rate never even dropped below 3%. It was between 3 and 4% during the decade. Now, if we even start to get close to 3% down from zero, then people are saying that they want to get mad at the Federal Reserve because they see it as he's going to put the economy into a recession. Well, that's what we need. We need higher interest rates. We need a recession. We need to deflate all of this inflation that has formed in the housing market, stock market, and many other markets, gold, silver, cryptocurrencies. And eventually prices get too high, people stop buying, and the economy slows down anyway, and you go into a recession. But the Federal Reserve really, their role has changed to become more involved in the economy, and now the Federal Reserve is raising interest rates, and people fear a recession. That's why the markets are reacting the way they're reacting.
Ladies and gentlemen, again, we've got Jonathan Bogan on the line right now. John, it makes so much sense when you say we need a recession. We need a depression at this point. I mean, when I look at stocks like Amazon, right, which, again, a couple of weeks ago, we were talking about a $2,000 per share company. And you mentioned earlier in the broadcast that we've got individuals out here who don't even have $400 to their name. As many as 40% of Americans, right, do not have $400 for an emergency. And when we look at stocks getting to $2,000 a share, I mean, we've got to understand this is basically for the rich, right? I mean, this game is become a game for people who are, I mean, not even American. They're definitely, there's something else, right? There's just something else. They've been able to tap into a part of this country where it allows them to get access to money that the general society hasn't been able to get access to. They're clicked in with the banks. They're clicked in with, again, these organizations that just have the access to the money. John, could we ever get to a point where, again, we don't have their permission to collapse? Like, when is that point that it just happens and things just kind of correct? Because as I talk to people about this, and I'm talking about the perma bulls, they say, well, debt as a percentage of GDP is quite small, right? That's their guideline. They say, well, our debt, if you look at our GDP, look at a percentage, it's small. So we can run these deficits for a couple hundred years. That's their guideline, because they say, well, if we can maintain 4%, 3% growth, then we're just always ahead of the curve. Is there a date we can put on when this can correct itself, or are we just kind of having to wish that this would eventually end and kind of just buying time as days go by?
Well, if the economy continues to grow past July, that would mean that this economic expansion, that would make it the longest in American history. That would make it longer than 10 years. So if we get to July and we haven't fallen into recession, this expansion would have gone on for a decade and a month. Mm-hmm. It's possible. It's quite possible we could go into 2020 even, and if without the recession having begun. And if that happens, this decade, the 2010s, would be the first decade and only decade in American history to see no economic slowdown, no recession take place any year of the decade. And it is possible. We know that expansions cannot go on forever in a boom-bust economy, which we live in. They all come to an end. Some of them come to an end sooner than others. This is definitely one of the longest in history, and we will only find out how much longer it will go over time. But it certainly will end. And when it ends, then it's just a matter of how severe the recession/depression will be. But we have every reason to believe that it will start a chain reaction that could become an epic financial crisis just because of how much debt we have relative to the amount of cash we have. Anyone who says that our debt to GDP ratio is low is just not looking at the numbers. There's our debt to GDP ratio is about between 105 to 108%. If you look at all the money that the government has borrowed, that versus the GDP, we have more debt than the size of our economy. So the only time in history where the debt to GDP ratio was higher was at the height of World War II. But we were fighting a war, and that war was going to end, and it did end. And as soon as it ended, the debt to GDP ratio began to plummet because we did not need to spend on the war effort. This is the only time in history where the debt to GDP ratio has surpassed 100% during peacetime. It's the only time in history this has ever happened. Also, and I created a video that people should go to my YouTube page and watch, where I explain that something else has also happened that we've never seen before. We have just seen 3 consecutive years of rising federal deficits without a major war and without a recession occurring. That is something that has never happened before in history. During a recession, your deficits are supposed to get smaller. During an expansion, During a period of economic expansion and growth, your deficits are supposed to get smaller because you have more tax revenue, because you have more growth. Mm-hmm. We have not had a recession during this decade, and the deficits got larger. We have not fought a major war, one requiring a draft, for example, and the entire economy to mobilize to fight. We haven't had that. The deficits got larger for 3 years in a row. That has never happened before in American history. So we are in uncharted waters, and everything points to the next recession being more severe than we've ever seen before. So people, and one reason for that is people are unprepared. We were talking about the federal workers. These guys are living paycheck to paycheck. They're worried about the next few weeks. People do not have years of money saved or stored in the bank. So when the next recession hits, you're going to see more people than ever panicking. You're going to see more people needing assistance. These businesses that are helping federal workers, it's costing them money too. They're giving away free food. They're giving away revenues. The banks are waiving fees. It's costing the businesses money, and many of these businesses are already highly indebted. So everything points to the next recession, whenever it happens. We don't know, but don't be surprised if it's over the next year, if not this year. Everything points to it being very severe because we have so many people unprepared We have so much debt that's like an anvil on the system, getting heavier by the day. And it's just a matter of time when prices get too high, interest rates get too high, before the needle pops the bubble and everything starts imploding.
That is a good segue for our conversation now, John, into the commodity that right now is driving higher, gold. I know you probably are very familiar with the Case for Gold written by Ron Paul, the New Case for Gold, another book written by Jim Rickards, talking about how gold is going to create the largest wealth transfer our world has ever seen. And that is basically when this dollar, this fiat currency, dollar that has ran the world for the last 150 years basically goes kaput. Now, we know that there are more physical dollars outside of America than they are actually in America. We know that I believe there are more $100 bills in Russia than actually in America right now. I recently just returned from the Congo. I saw individuals, interacting in the U.S. dollar as it's more trusted than their local currency there in that country. And many African countries do business in the U.S. dollar. So we are globally tied to this fiat piece of paper, John, and we've already got countries like China, like Saudi Arabia, like many of these them who are, or like Russia, who are now going out of their way to create avenues to push back from the dollar. But they really don't have a choice because, their system is also a fiat-based kind of a system as well. So when we talk about this boom happening, right, this collapse happening, obviously as option traders, I already know, you're going to lose, right? All the derivatives that are connected, these complicated financial instruments that are tied to this piece of paper, right? That's basically what it is. This piece of paper will all collapse. I mean, and the wealth, the power will go to these people, these individuals, these institutions that hold this physical thing called gold. Now, with that being said, John, many countries supposedly own large amounts of gold. We don't know how much this country owns in gold. The government no longer tells people, from what I've been reading. What will it look like the morning that the dollar collapses? Is it a thing where, hey, if I got a brick, right, I got a pound, an ounce, or something like that in my pocket of gold, am I instantly someone who's rich, or like how does that work? How does that work the morning after a collapse?
Well, I think the collapse will be one that's ongoing for possibly years. The thing about a collapse is most of the time it can happen very rapidly, but it can also happen slowly. The dollar did collapse during the 2000s. It took several years before the dollar stopped collapsing. From 2001 to 2008, you see the price of gold going straight up from $250 an ounce, I believe, in 2001 to $1,000 in 2008. The dollar collapsed over 7 years because we had inflation that was being created. The Fed brought interest rates to all-time lows, kept them at all-time lows for an unprecedented period of time, and you saw real estate prices go up. You saw the stock market, it went up too, but the stock market over the course of the 2000s stayed flat. Gold went up because people saw that the value of the dollar was going down by looking at the inflation of other assets, looking at the price of oil. It went up during the 2000s. The real estate and price of food went up. So people who were smart enough to see this they invested in gold, and those who got in early were able to quadruple their money. The same thing happened, after gold peaked at 1,000 in 2008. It fell down during the financial crisis. People were selling their gold, and that's the reason the price fell. It fell down to about $700 in 2008, and then it started rallying back up. And this was an even greater rally because the price of gold actually wasn't as great of a rally as the 2000s, but it still rallied from $700 in 2008 to about $1,900 in 2011 because more inflation was being created by the government and the central bank. And we saw the stock market start going up. We saw the prices of other commodities in the world go up. It's really the people who hold the asset that is receiving the inflation who are going to get rich off of the devaluation of the dollar. And that's the reason why gold and silver and really any hard assets, real estate is also included in that. Cryptocurrencies are also included in that. Anything that is real to get out of the dollar is something you want to hold when the dollar is falling. Because what that means is everything that is not paper money competes against paper money. So anything physical, anything that you buy with your paper money, it competes with paper money. So when the paper goes down in value, those hard assets that people buy go up in value. Likewise, when those hard assets depreciate, then the dollar gains value. So during the financial crisis, real estate was going down, gold was going down. The cryptocurrencies didn't exist at that time, but the price of food, the price of oil, energy, all of that was dropping, and the dollar was going up because people were selling their hard assets to get dollars. Once the government and the Federal Reserve come in with more fiat money from the printing presses, then people switch as they see that the dollar is now going to lose value. They start trying to invest in the hard assets. So it's basically a roller coaster, and the people with the foresight to know when everything will turn are the ones who have the greatest advantage. Nobody, of course, knows exactly when any market will turn up or down. It's best to get in and out early, but those who have an understanding of how the world works are the ones who are going to benefit from the devaluation of the dollar.
And ladies and gentlemen, that's why it's so important to get your hands on some gold. I feel, John, I'm almost late to the party in regards to that. I'm looking at some of the, ways to buy. And I mean, this is not cheap, right? I mean, this is not a cheap commodity to buy. You don't even know who to buy. Everybody's got different prices, different dealers pay different levels over spot. I mean, it's a very complicated business to get into when we talk about buying physical gold. For individuals who can't afford gold, right? Because I want to give people something that they can go out and protect themselves with. And I'm seeing stuff like copper, right? I mean, before I was doing again some ideas on what we can tell people today to kind of protect themselves from this. Obviously, copper has some interesting uses. It is something that's tradable on the markets. Is copper, right? Obviously not as expensive as gold, not as many uses as gold, but yes, it's a physical metal. Is that valuable, or John, what you know about copper? Is there just basically too much out there for it to be valuable and something for a poor man to be able to get into and start stocking up on?
Well, I think that there's there's certainly a variety of things. Silver is seen as a good alternative because the price of silver, I don't think, is even $20. So an ounce of silver is definitely affordable for people. Gold has been between $1,000 and $1,400 an ounce for the last 6 years, and silver is. I've heard it said that gold is the money of kings, silver is the money of gentlemen. In other words, silver is more affordable. It's seen as the money of the common man. Okay. So I think between $15 and $20 an ounce is where silver has hung around for most of the decade, and there is a lot of speculation about how much silver will rally when the money printing machines get going during the next recession. Mm-hmm. So I would definitely, for those who can't afford gold or something more expensive like real estate, you can try silver or other metals, anything real, copper, and companies that also mine for these things, they can be seen as a good place to invest. Then, of course, you would have to look at each individual company because you got lots of companies working on the same metals, and they're not all in the same shape financially. There are stocks that are affordable that should be looked at as far as that don't mine metal, but that do other things. The rental car company, for example, Avis, had a huge rally during the decade. In fact, a bigger rally than Apple and Amazon. You actually, if you invested in this rental car company, Avis, you would have made more money as a percentage than you would have investing in Apple or Amazon. Wow. So sometimes, you don't really know which company is going to do well. The biggest rally,
John, not to interrupt you, but what caused that? I mean, I do see here, Avis had hit a low of about, 55, 56 cents in the decade, February 2009, whatever that low is, but it was below $1 to a high of 72. What caused that? That's an incredible run.
Oh, yeah, well, it's really hard to say, although a lot of different companies did rally during the 2010s. The entire New York Stock Exchange saw a rally of anywhere from double to triple to quadruple. A lot of NASDAQ companies, I think the NASDAQ actually had the biggest rally of all the New York Stock Exchange companies. It's really hard to say. It's not a company that I actually looked much into. It was a penny stock. Avis was a penny stock at the bottom of the financial crisis. Right. And when, penny stocks, you know more about penny stocks than most folks, but a lot of the times people don't want to invest in them because they're penny stocks. They're seen as too risky, and they're seen as not necessarily going to go anywhere. It's almost, people look at them and they say, well, that company's not going anywhere because most, companies that the shares are too low in price, they probably are here today, gone tomorrow. But obviously, every company starts out low. This was, if you got in here, you were truly going to be very wealthy. Right. And Bitcoin. But, the biggest rally actually took place with Bitcoin. And that's, of course, before, 2017. The biggest rally in history, Bitcoin was created during the financial crisis. And it didn't really go on the market until 2010. When it went on the market, it was worth a third of a cent.
Jesus Christ.
Let me say that again. Bitcoin in 2010 was worth a third of a penny.
John, if we only had a time machine, bro, I'd just go back and slap myself so much.
I know. I've told people about this, and I look at that and I go, I mean, you're probably not going to want to hear this, but I got to say this anyway, just because I got to put this in perspective. But if you had $1 in 2010, you could have bought 300 Bitcoins. If you held on to those 300 Bitcoins and then you sold them at the end of 2017, that dollar would have turned into about $6 million, because a Bitcoin was selling for $19,700 in December of 2017, after coming up from being worth less than a third of a penny in 2010. So that is, and of course we've seen it's dropped 80% since the all-time high was reached in December 2017. But if you had that kind of foresight to grab Bitcoin when it was literally nothing and to hold on to it, and you can see that Bitcoin pretty much didn't do anything until 2016, 2017. But you had to, that's the thing about being an investor, you learn things, and if you have the eye, if you have the belief in something that turns out to grow, then it could be the difference between having nothing and having everything. But, Avis, I think, is another example of that, where people didn't think much of it, but you would have made more on your money with that than you would have buying Apple or Amazon. So it's just, I think it's partially a skill, and part of it just not having control over what happens in the market. Because remember, the Federal Reserve was pumping this market up too, and that's something we can't control.
Excellent. What's going on, Mr. Lloyd? Shout out to the people in the chat room right now. Again, after our discussions with John here, I'll take a little bit of break, but I'll be back and we'll do a show and discuss some of the tickers that are running right now. A lot of money coming back into the OTCs right now. And John, we had a question. What about, because I don't want to get too far from gold, I want to answer people's questions on that. What about futures contracts on gold and silver? Obviously, another derivative, right, of fiat money. Again, another part of the complicated web of financial instruments we have created out there. Would those be any help to individuals to survive a market collapse, or are we getting wiped out? Individuals who have options, who have these kind of complicated instruments, when the boom goes bust?
Well, the derivatives are definitely they're very volatile. Futures contracts are very. There is a gambling casino aspect to the modern market because of how volatile it is. In my book, I do talk about this. I talk about how people do not hold investments. The time that people hold a stock has plummeted over 90% over the last 60 years. Back in the 1960s, the average length of time someone would hold a stock would be 8 years. Today, it is about 6 months, and I would say 3 months or less.
Oh, John, I had an article I posted on Twitter. It was 22 seconds. Now, we're talking about now that most trading is institutional. 22 seconds in 2012. I found this article. I posted it on my Twitter. 22 seconds, John. Incredible.
Yeah. These are your the people who are day traders. They sit at the computer. They watch things in real time, Their hand is on the mouse. It's on the keyboard. They're just waiting for any slip. These are the people who sold when there was word that Jerome Powell would continue to raise interest rates this year, or that there's commentary. You know, all these people, they have their TVs on to CNBC, all the brokerage firms, the rooms, they're tuned in to CNBC because that's the channel where if the Fed has a meeting and there's going to be an announcement of a rate increase or not, they're all watching, and as soon as there's an announcement, you see selling or you see buying. You see a rally or you see a crash. And everybody, because it's a much more volatile market today, and the derivatives are a way of trying to profit from volatility. The movie, The Big Short, which came out 3 years ago, is a great movie to watch if you want to see how people try to profit from a very volatile, screwed up market, where derivatives contracts are created to basically try to benefit from, say, if the housing market crashes or is scheduled to crash. You know about the volatility index known as the VIX. Mm-hmm. That's also futures contracts. And the thing about it is you're trying to predict whether or not the market is going to go up or down by a certain amount. I know you talked about calls and puts on your program, which are really just another way of trying to bet whether or not a stock or an investment will go up or down within a certain period of time. Personally, if you feel like you got a good eye or a good feel for the market, then go for it. But if you're starting out, I would not jump into derivatives because they are very volatile. There's a gambling aspect to it, and you're basically trying to pin the market down in an age where the market is actually getting more volatile and more difficult to try to make a guesstimate on where it will be, even over the next few hours. Like you said, 22 seconds is nothing. I mean, the market can swing 2 or 3% 2 times in 10 seconds. That's how volatile the market can be. So there's a lot of worry going on, and with Jerome Powell doing what he's doing and other countries doing what they're doing, I just think that it's not a safe place to be if you're choosing the most volatile investment.
There it is, guys. Shout out to everybody in the chat room. Have a good night, Mr. Lloyd. Mr. Lloyd in the chat room. Again, we'll be discussing a lot of these penny tickers in just a brief moment. John, I'm thinking about 2019, and I really want to make the case for penny stocks again. And I say that just because the more I love options, I love what I've been, the money that I've been making betting against this market over the last 2 years. The last 4 months have been my most successful out of 24 months. The last 4 months have been my most successful. But at the same time, it's so crazy to see how many people can't play a $1,000 option, a $1,500. People don't have the money, John. They don't have the money, right? And when it comes to those derivatives, the ones with the highest probability are the most expensive. And the system does that in a way to kind of protect itself. And I totally get it. I mean, the brokers are protecting themselves. The system is set up to protect itself. So if you want to win, you've got to spend the most money. And if you basically want to gamble, then you're left paying these sub $1, puts and calls where you're basically like throwing dice in the air. And it's just like depending on these 5-minute or 6-minute charts or 1-minute charts, and you're just like, oh, let's see what happens, and It's really fucked up. It's really, really fucked up. So when I talk about trying to get a broad audience, right, trying to reach, thousands of people with something, obviously penny stocks, it's always made the most sense in that aspect. It gets the most attention because it's cheap and most people can afford to play it. But make the case for me, John. What would you say to someone to get them to play in penny stocks? If I had to, I just want to get your idea. What's the case for penny stocks?
Well, I think you did a good job at pointing out one of the major reasons it's a good place to start is the price. Penny stocks are the most affordable type of stock. And there's volatility with penny stocks too. But if you're going to buy something volatile, at least don't invest too much. Have it be something where if you lose your money, it's not a big deal. You correctly pointed out, and I pointed out, that people are maxed out. People are not in a position to spend hundreds and certainly not thousands of dollars on an investment. It's one reason why I would tell them to shun a lot of the derivatives contracts, because those people will bet millions of dollars on a derivatives contract. Thousands of dollars, hundreds of dollars. If you're going to play a volatile investment, put in $5. Put in maybe $10, or the penny stocks. I think it's a great place to start, and I think you've done pretty well at showing that to people. Avis was a penny stock. Now it went to $30+ a share, and you would have had millions of dollars if you had bought enough shares of those. I think pointing out the stocks that were penny stocks, that were affordable for only a few dollars, and then they went up to put out the stories of those stocks that started out small and went big. If you want to inspire people to get into penny stocks, definitely put those good news stories out there where you can say, look, I only spent $5 on this, but now it's worth $500,000. And it happens.
It's actually true. Wow. That's actually true, John. I can't tell you how many scenarios that it's happened to people. Some people even in this chat room that, put $50 somewhere and came back 4 months later and had $250 or $300 or $400 because just sometimes that's how it happens, man. And people will tell you that the incredible opportunities in terms of gains and the leverage you get by buying some of these stocks that are, sometimes, a tenth of a cent, John, that will go to a nickel or 10 cents over the course of a year or two. And we're talking about, 1,000, 4,000, 1,000, 2,000 plus type of gains. So it's just really interesting because I'm thinking about the case to make to people moving forward because things are going to get tough, John. And I appreciate you again for talking to me over the last hour now and our audience, because things are going to get very, very hard. Things are going to get very, very hard. And
and I would just, not to interrupt you or anything, but I think that if you were to have a list of investments, Bitcoin is something you could put on the list. Avis you could put on, Amazon, Apple. There are many other stocks and companies that back in 2009 were less than $10 a share, or were certainly less than $100, but many of them less than $10 a share.
Right.
If you just find those, and then you just look at how much they went up all the way until 2017, 2018, and you say, look, if you just had pocket change, if you just had a few dollars, and you put it in these, look at how much you would have made over the course of this decade. So those are the stories that really inspire people to get into penny stocks, because of how easy it is to get in and how much potential there is. Now, you got also, and I know you've done this, but people know there's risk. You can lose all your money on any stock.
Right.
But it's also good to know the Federal Reserve, even though I don't believe the Federal Reserve should exist at all, the Federal Reserve has put itself in a position where it is now backing the stock market, where if the stock market crashes too much, if the economy crashes too much, it's creating money to basically pump up everything that crashed. So that's also good to know, to tell people, is that good time to get in is when a recession is either almost over or over. That's when everything starts getting pumped up again. And that's when, if you search out the penny stocks to get in and ride it up.
There it is, ladies and gentlemen. Thank you so much. And again, I've been talking to Jonathan Bogan. Please go and get his book if you loved what you heard today. Again, he's got 400 pages. I don't know how many guys in their 20s are out there creating classics like this. The book is called Say No to Big Government. I went to college with this man on the phone right now, and I'm going to tell you right now, he was at work at this book then, right? I remember, John, you would come over to my little crappy apartment there in Dearborn, that shitty studio apartment, and I told you I wanted to get into this penny stock thing, and you told me you were writing this book, and it's just amazing to see what, how our lives have really kind of developed over the last couple of years, and I'm just really excited how we've really just kind of both put our heads to the ground here and created something. I'm really excited about what you're doing, John, especially with your YouTube page, and I know because something's going to break. You're going to get your big break really soon, dude, and that's why I'm really creating these episodes, because I know they're going to be classic shit. I just know it. I know it's going to be classic shit, and people need to hear what you've got to say. And things have got to give, man, in this country. We got to create, again, that opportunity for freedom again, so businesses, big and small, can truly compete in this country, man. And I think you've got a lot of good things to say about that. So, ladies and gentlemen, please press like, but more importantly, subscribe on my channel. Subscribe to his channel, right? Subscribe to his channel as well. It should be in the description. If not, by the time you read this, it'll definitely be in the description. But again, ladies and gentlemen, we've been talking to Jonathan Bogan, author, Say No to Big Government, My Case for Maximum Freedom. And follow him on Twitter. Follow him on YouTube. Get his book on Amazon. And I'll definitely be putting all the information you guys need in the description below. So, John, again, is there anything else, any lasting words that you want to leave for the American people, the people who are watching right now?
Yes, well, I appreciate the opportunity to come back on and talk about these and many other important issues. I do want people to understand now, because it's 2019 and we have a presidential race that has started. These things now start 2 years early. And you're going to hear a lot of new candidates come in trying to challenge the president, and they're all Democratic candidates, and they're going to have, I believe, the most socialistic platforms that you're going to hear in a long time, if ever. People need to reject socialism. They need to reject big government, because big government is the reason why so many people do not have money. It's the reason why the cost of living is so high and climbing higher. It's the reason why people are financially unable to invest the way that they should be able to in order to build wealth. The government, through our representatives, has increased the tax system, has increased the regulatory system, has devalued our money through printing and through shady banking practices. This is the reason why it's so hard to climb out of poverty. This is the reason why it is so hard for people to retire securely. It's the reason why healthcare and education have gotten so much more expensive over the last really many generations, but especially during this decade. We need to understand we're not going to make our lives better by electing people who say, I've got a government program that will solve that. I'm going to create a national health care program. I'm going to give you more welfare. I'm going to raise tax wealthy to fund some program that will erase poverty. I'm going to, all of these state-based, government-based ideas have drilled a hole in the prosperity that we used to have in this country during the 20th century. And this year the election is going to kick into high gear. You're going to see more people announcing their runs for president, and they're all going to promise you more government programs. Do not buy into them, because we've had these government programs for many generations. They have not improved our situation. In fact, they've made our situation worse. Poverty used to go down in America until 50 years ago. When we created government programs to get rid of poverty, poverty stopped going away. We made it a permanent feature of American society. People need to stop believing that you can tax the rich to pay for any kind of government agency or department that you want, because you can never get enough money from the wealthy in a time when they can go offshore, they can move their money elsewhere, they can also stop growing their business, which will create an economic downturn, which will find its way back into tax revenues. You have to have a strong economy, and the way you do that is you take the foot of government off of the back of business. There is no other way. So I want people to be on the lookout and to support Libertarian candidates. Do not support Republicans, because they are no different than the Democrats. They're all big government politicians, each with their own ideas, but all their ideas are the same. Grow government, more taxes, more regulations, more spending. Support Libertarian candidates in 2019 and 2020. And that is the only way we can expect to change our country for the better.
There it is, ladies and gentlemen. A great way to end the show. Thank you again, John, for coming on. Appreciate all of you guys in the chat room right now. Again, I'm going to take a quick breather, and I'll be back live. Those of you guys who can't join me, definitely watch the replay of the stock show. We're going to talk about some tickers here into the night. So until then, again, John, I know we'll talk again real soon here, buddy. Take care of yourself. Again, thanks for coming on, man.
Thank you.
All right. Shout out to John for coming on. Again, guys, I will be right back. Again, and I hope you enjoyed what you watched. Please press like on this video. If this is your first time watching, please subscribe. I could use all the new viewers I can get. So I appreciate all of you who have been watching for many, many years, and those of you guys who are new today. See you guys in just a moment. I'll be back. Take care.